keep in mind that the session is now being recorded. So if you prefer to ask questions anonymously, please use the Q&A function to anonymously ask a question. There will be polling questions during the presentation. So in order to get CPE credits for this class, please answer the polling questions. There will be a total of 3 today in this class. And whether or not you get the correct answer does not affect your CPE credits, even if you fail all of them. If for any reason you cannot answer the polling question, please use the chat function to let us know. And then at the end of the class, Stephanie will post a link to a survey through Wufoo that you will use to fill out a survey to get CPE credit and to get your certificate. So at the end of the class, please look in the chat and get the link for filling out the survey. That way you can get your certificate, which will be sent to you by the end of next week. And then I think there was one other thing. Someone remind. Oh yeah, and then a PDF of the slides has been posted to the chat, and Stephanie will continue to post it a couple more times as more people join us this morning. So with that, I'm going to go ahead and get started. Okay, I need to swap this. Okay, so hopefully you cannot see my notes.
Right, we're good.
Okay, awesome. So my name is Whitney Crockett, and I'm an audit manager with Mason Associates. And I've been with Mason Associates for 10 years now. And I'm going to be covering upcoming GASB pronouncements as of, fiscal year 22 and forward. So for fiscal year ending June 30, 2023, there are kind of a more than a handful of GASBs. And those include GASB 87 leases, which everyone is talking about right now. Also GASB 89, which is accounting for interest costs incurred before the end of a construction period. GASB 92, Omnibus 2020. GASB 93, replacement of interbank offered rates. GASB 97, certain component unit criteria in accounting and financial reporting for Internal Revenue Code Section 457 deferred compensation plans. Part of this was already effective, which I'll cover in those slides. Also GASB 98, the annual comprehensive financial report, and GASB 99, Omnibus 2022. There's portions of that GASB that are effective in fiscal year 22. And then in fiscal year ending June 30, 2023, we have GASB 91, conduit debt obligations, GASB 94, public-private and public-public partnerships and availability payment arrangements, GASB 96, subscription-based information technology arrangements, and GASB 99, Omnibus 2022. So that one, GASB 99, covers 3 different fiscal years. So in fiscal year ending June 30, 2024, again, GASB 99, Omnibus 2022, and GASB 100, accounting for changes and error corrections, which was just released in June. So GASB, just like us, being so busy, they've been very busy coming out with new GASBs. And then there's a lone soldier in fiscal year ending June 30, 2025, and that is GASB 101, compensated absences. So for those of you who have December 31st fiscal year ends, this slide is for you, and it covers, which fiscal years have, implementation dates amongst those GASBs I just talked about. Okay, so starting with GASB 87 leases, I'm just kind of going to do a high-level overview of this because in our next session at 10, which will be taught by Amy Meyer, we'll cover this GASB in depth, but just kind of a high level. So GASB 87 is effective for fiscal years ending June 30, 2022. And basically what this GASB has done is amended previous guidance for leases. So there's no longer a 4-part test for determining whether a lease is capital or operating. And it's amending the what constitutes a lease and redefining a lease to match FASB. And so basically the formal definition of a lease is a contract that conveys, a contract that conveys the right to use the non-financial asset for a period of time in an exchange or an exchange-like transaction. So there has to be an underlying contract, and in that contract, there must be a conveyance of control of the use of the underlying asset. And so the most common examples are land, buildings, vehicles, and equipment. But I think land and buildings will be the most common. And also, the lease has to be non-cancelable in order for it to apply. So again, please join us in the next session at 10 to cover this GASB in depth. So the next GASB effective in fiscal year 2022 is GASB 89, which is accounting for interest costs incurred before the end of a construction period. This GASB has been around for a few years now. And basically, under current standards, some governments with a business type activity or enterprise fund are capitalizing interest costs incurred before the end of a construction period. And so what this GASB does is says that the interest costs must now be expensed as incurred, so there's no more interest cost capitalization. In the past, this was optional to capitalize interest. So what GASB has said is basically to just stop capitalizing interest. There's no need to restate existing balances, just stop the practice and move forward. And the thought process behind this is that GASB believes that interest costs incurred should be recognized an expense because it's not really part of the historical cost of a capital asset and not being part of the service capacity of that capital asset. So it shouldn't be included in the value. So there is one exception to this GASB for business type activities that have regulated operations, such as those subject to the MUD Act. And basically, GASB says that capitalization of qualifying interest costs as regulatory assets should remain applicable. Okay, so we're going to do our first polling question.
Whitney, it's not letting me launch it. It just says share results. Let me see what I've done wrong.
Oh, really?
Yeah, I'm gonna click share results and maybe it'll let me do it again.
Oh, I know. Okay, so you see the 3 dots?
Yes.
So if you click that, you can, okay, cool.
Okay, got it. All right, there we go, everyone. You can do the poll and we'll, once we get close to the end, we'll have about 20 or 30 seconds.
Okay, so what is the title of GASB 101? I'm disappointed not more people are picking fun and games.
All right. Looks like it stopped. Okay, I'm gonna end the poll. A couple more came in. Okay. Yes, Kathy, all GASBs are fun and games. And we'll share the results.
Okay, cool. So what is the title of GASB 101? The correct answer is compensated absences. So good job. Most people answered that. Accounting for changes and error corrections is GASB 100. And then Omnibus 2022 is GASB 99.
Great.
And fun and games is, like Kathy said, everything GASB does. Okay. Let's see. Okay, so GASB 92 is Omnibus 2020, and the remaining pieces of this GASB are effective in June for fiscal years ending June 30, 2022. There were certain components of this GASB which were previously effective in fiscal year 2020. So those items on here are those that are effective in 2022. So this GASB clarifies reporting of intra-entity transfers of assets. And basically they say that amounts associated with the transfer of capital or financial assets from an employer to a defined benefit pension or other post-employment benefit plan within the same financial reporting entity should be reported as contributions. And then for reporting of assets accumulated for defined benefit post-employment benefits provided through plans that are not administered through trusts that meet specified criteria. Basically, this GASB is clarifying to connect the dots between statements 73 and 74 and statement 84 by limiting the requirements of paragraphs 22 and 25 to defined benefit pension and OPEB plans. So not really a huge change there. And then government combinations and disposals of operations. This provides an exception to use of acquisition value in the measurement of an acquired asset retirement obligation. And then also they, in this GASB, have changed the reference to non-recurring fair value measurement by amending the example of non-recurring fair value measurements. Basically, it's kind of an administrative change, just making statements 62 and 72, the examples mirror one another. Okay, so GASB 93, replacement of interbank offered rates. This GASB is effective in fiscal years ending June 30, 2022. And so basically there's some governments that have entered into agreements in which variable payments are made or received depending on an interbank offered rate. And the most notable one being used is the London interbank offered rate. And as a result of global rate reference reform, LIBOR, which is the London interbank offered rate, ceased to exist in its current form at the end of 2021, which prompted local governments to amend or replace financial instruments for the purpose of replacing LIBOR with other reference rate by either changing the reference rate or by changing fallback provisions in the contracts related to the reference rate. So LIBOR is replaced or being replaced by the secured overnight financing rate, also known as SOFR. So this statement addresses hedge accounting requirements by providing an exception to the termination and lease modification requirements of statements 53 and 87 by basically putting in an exception to the rule termination treatment for hedging derivative instruments related to the reference rate rule and the change of that reference rate. So before this GASB, GASB required local government to terminate hedge accounting when a critical term was being changed, such as a reference rate in this case. So what they say is that instead of terminating, a government can continue to hedge the derivative instrument using the new rate, the SOFR, as long as certain criteria are met. So they identify those criteria in this GASB. And the statement allows for a two-step transition for ease in addressing the retirement of LIBOR. And the last piece is, for this one, GFOA has issued a member alert on what state and local governments with hedging derivative instruments that use LIBOR should be discussing with their financing teams. Most likely, if you have such instruments that you've probably already discussed, but just something to keep in mind. Okay, GASB 97. This one is certain component unit criteria in accounting and financial reporting for Internal Revenue Code section 457, deferred compensation plans. So the first two pieces regarding component units were effective in fiscal year 2020. So they're already effective. The piece on section 457 plans are applicable to fiscal year ending June 30, 2022. And for section 457 plans, GASB says now that they should either be classified as either a pension plan or an other employee benefit plan as follows. So a section 457 plan that meets the definition of a pension plan under statement 67, 68, and 73 is a pension plan for accounting and financial reporting purposes. So if your section 457 plan meets the definition of a pension plan, so looking at the nature and use of that plan, if it does, then accounting and reporting should be similar to those GASBs for pension reporting. But if it doesn't meet the definition of a pension plan, then it is an other employee benefit plan for accounting and financial reporting purposes. So another piece of this is also statement 84 should be applied to determine whether an arrangement organized under section 457 should be reported as a fiduciary activity in a government's fiduciary fund financial statements. So I guess, the big thing is to just kind of analyze the section 457 plans that you might have and see how they're being utilized and determine the nature and manner of use in order to see if this GASB will apply to those plans.
Whitney, we have a question. I forgot you wanted questions along the way.
Okay.
The question is whether, for GASB 97, what about 401A plans?
It doesn't apply to 401A plans, just 457 plans.
Okay.
Okay, cool.
Oh, sorry, and there is one more. I forgot to check both places. And can you go through the general criteria for what qualifies as a pension plan?
Okay, so off the top of my head, there has to be, I guess, how do I say, I'd have to think about this a little bit just to make sure I cover all my bases.
It's funny because it's one of those things we know, but we just can't say
I just
it
can't say it in terms that are tangible.
No, but one of the easy, I'll give you one of the easy examples. If in your 457 plan, the city has committed to matching, or the city has committed to certain contributions to the plan. So now there is a commitment for providing, the employer is providing benefits under this plan, even though it's outside of the normal pension, it's walking and talking, it says it's walking and talking as a pension plan. Because there are either required contributions either through an MOU or some other commitment that the employer is making. And so that could fall in line under being a pension plan. Now, whether it's a defined contribution or defined benefit plan depends on the structure of the plan.
Yeah, and I think, for this one, if the employee is just contributing to a section of 457 plan on their own, then I don't think that it would apply there because there's no, consideration given by their employer. So I think that's where it comes, what comes into play is just looking at the nature of the plan and how it's being used.
Yes, and how much control the employer has over it.
Yeah. So yeah, I think it's one of those GASBs that kind of fell under the radar a little bit only because GASB 87 is so massive. But you definitely want to take a look at this so you can plan accordingly, especially if some research is involved, to make sure that you don't need to report these plans as pension plans. Okay, so GASB 98, the Annual Comprehensive Financial Report. This is the last GASB effective in fiscal year ending June 30, 2022. So this statement was developed in response to concerns that the common pronunciation of the acronym for Comprehensive Annual Financial Report sounds like a profoundly objectionable racial slur. And so I think most agencies last year implemented this statement early, but if you haven't, you must implement it this fiscal year, and make sure that all of your reports and any reference, in agendas and statistics, everything like that, everything should be changed to Annual Comprehensive Financial Report. Okay, GASB 99 Omnibus 2022. So like I mentioned earlier, this GASB covers 3 different fiscal years. So I'm just going to go ahead and talk about each fiscal year for this GASB, so I don't have to jump back to GASB 99 in my later slides. So the requirements effective in April 2022 include replacement of LIBOR. Basically, they say that LIBOR is no longer an appropriate benchmark interest rate for a derivative instrument that hedges the interest rate risk of taxable debt after 12/31/2021. Now it is secured overnight financing rate, SOFR. So pretty straightforward there. Then SNAP, basically they say that SNAP applies to state governments. And then there's clarification about non-monetary transactions, and disclose in notes to financial statements the measurement attributes applied to assets transferred rather than the basis of accounting for those assets. So it's clarifying the treatment of the disclosure treatment for non-monetary transactions. And then for pledges of future revenues when resources are not received by the pledging government. This is related to debt of component units when they issue standalone financial statements. If the primary government pledges revenue for the component unit's debt and accounting for amounts due to the component unit. So I think they're, financing authorities, this could apply to financing authorities, but any component unit also. But that'll be the most common. Then the focus of the government-wide financial statements, they say that the government-wide financial statements should only display information about the overall reporting government, except for fiduciary activities. So basically, they must have seen, an issue with entities reporting government-wide financial statements with fiduciary activities in there. So just a reminder that fiduciary activities shouldn't be included in government-wide financial statements. Okay, so the requirements effective in fiscal year 2023 are mostly have to do with leases. So they have amended or clarified the pieces about lease term, short-term leases, lessee and lessor recognition and measurement for leases other than short-term leases, and contracts that transfer ownership. Also, payments based on an index rate or rate that are fixed in substance should not be included. And then any variable payments based on future performance should not be included. Future changes in an index rate or rate for variable payments or the government's incremental borrowing rate do not require remeasurement. Lease incentives are equivalent to a rebate or discount. So for those of you who are impacted by any of these revisions, so a good thing is to just take a look to see what the clarifications are. We would recommend that you consider early implementing this GASB in conjunction with GASB 87, so you don't have to revise any accounting treatment or reporting later on, especially if you're heavily impacted by these clarifications. This GASB 99 that applies to fiscal year 23 also covers some clarification to what we call triple Ps. Those are basically amending the PPP term, the transferor recognition and measurement for the triple Ps, the operator recognition and measurement for triple Ps, and I'll cover more of this later. And then SBITAs, subscription-based information technology arrangements. So already they're clarifying what is a subscription term, addressing and discussing short-term subscription-based IT arrangements, and recognition and measurement for subscription-based IT arrangements other than short-term. And I'll call them SPITAs, because that's easier. So the last piece of Omnibus 2022, effective in fiscal year 2024, has to do with financial guarantees, basically establishing that those financial guarantees do not apply to special assessment or conduit debt, and also establishes accounting and reporting requirements for exchange and exchange-like financial guarantees. Also, they discuss derivative instruments that are neither investment derivative instruments nor hedging derivative instruments, and setting disclosure requirements for those types of instruments, discussing termination of hedge accounting, and establishing a title for income statement line item related to termination events. Okay, so GASB 91, conduit debt obligations. This GASB is effective in fiscal year ending June 30, 2023. And we've known about this one for a while, but essentially there are 5 characteristics of conduit debt. And those are that 3 parties must be involved in the transaction. The government and the borrower cannot be within the same financial reporting entity. The bonds must be non-parity bonds, so they have to stand on their own. The third party as part of the transaction must only be the one who's receiving the proceeds, not the government. So the proceeds must go to borrower or agent. The third party borrower cannot be the one obligated for payment of all amounts of repayment. So as long as those 5 criteria are met, the debt would be considered a conduit debt. So what does this mean? So conduit debt will not be recognized as a liability unless there is an additional or voluntary commitment that the government makes as part of the transaction. And some examples of these would be like an appropriation pledge, a financial guarantee, or like pledging property or revenue as security, but only record when it is more likely than not that a commitment will occur. So it's kind of a little bit of judgment there for potentially recording any sort of liability. So for the note disclosures will include a general description of the issuer's conduit debt obligations, also a general description of any additional commitments, including limited, voluntary, or additional commitments, including the length of time, if any, and then also if any arrangements for recovering payments are there from third-party obligors, and then the aggregate outstanding amount of all of the conduit debt obligations that share the same type of commitment at the end of the reporting period. And then if the issuer does recognize a liability as a result of any commitments, or if they're recording the liability for the debt, there are additional disclosures which are very similar to those for other types of debt that need to be considered. So, all right, polling question number 2.
All right. If I can do this right this time. Go. Here we go.
Okay, in what city was 578 million public school unveiled?
Wow.
I came up with some trivia because I didn't want. Actually, I didn't come up with this. This is from the news. Don't Google it.
Oh yeah, we should do it in short enough time where they can't Google it.
I know.
Cut the polling. Oh,
I actually had no idea about this until I just looked up, Googled some trivia questions to get this.
I have to go Google this school now. I'm sure it's all techie. The price is probably in the tech, is it? All right, we're at about 83%. We'll let it go about 10 more seconds.
Yeah, mucho buco.
All right. Here we go.
Okay, so the correct answer is Los Angeles. So fun fact of the day.
Wow,
Lots of money.
goodness. All right.
Okay, so I will continue. Okay, GASB 94, public-private and public-public partnerships, also known as the Triple P, and availability arrangements. This one is effective in fiscal year ending June 30, 2023. And there's two different types of arrangements under this GASB, the Triple P and availability arrangements. So the intention behind this GASB is to address a gap in GAAP. What they found when they were looking at service concession arrangements under statement 60 and then leases under 87 is that there were certain arrangements that did not fall under either. So the purpose behind this GASB is to provide guidance on the treatment for situations that fall into this other category. And this GASB is to supersede GASB 60, accounting and reporting for service concession arrangements. So a Triple P is an arrangement in which a government, also known as the transferor, contracts with an operator to provide public services by conveying control of the right to operate or use a non-financial asset like infrastructure or an other capital asset for a period of time in an exchange or exchange-like transaction. And then an availability payment arrangement, APA is the acronym there, is an arrangement in which a government compensates an operator for services that may include designing, constructing, financing, maintaining, or operating an underlying non-financial asset for a period of time in an exchange or exchange-like transaction. So your head might be spinning a little bit for those. So I'm just going to kind of go over the three characteristics for each that that apply. So for a Triple P, there's three characteristics. The characteristics of a Triple P include that the operator collects and is compensated by fees from third parties. The second characteristic is that the transferor determines or has the ability to modify or approve which services the operator is required to provide, to whom the operator is required to provide the services, and the prices or rates that can be charged for the services. And then the third characteristic is that the transferor is entitled to significant residual interest of the underlying service utility, so Triple P asset, at the end of the arrangement. So the key here is that the transferor in a Triple P has the ability to make the decisions, not the operator. So the treatment for a Triple P is very similar to GASB 87. And looking at the illustrations in the GASB, they include, actually, most of them have apply to states. For example, like bridges and tunnels being the most common, and also like demand risk projects, such as student housing and parking. But I'm sure there are others as well. Okay, so availability payment arrangements are different in that there's also three characteristics. So it's an arrangement in which a government compensates an operator for services that include or may include designing, constructing, financing, or operating an underlying non-financial asset for a period of time in an exchange or exchange-like transaction. So this type of arrangement is dependent on the asset's availability for use rather than the use itself. And the availability for use may be based on specified criteria like the physical condition of the asset or construction milestones. And I think the key here is that in a APA, a government procures a capital asset or service rather than receiving compensation to allow another entity to provide public services. So that's really the distinguishing characteristic for availability payment arrangements from the triple Ps.
Whitney, can you give examples of a PPP or an APA?
I don't have an example for an APA, but an example for a triple P would be like, bridges and tunnels, could be, for states that use, an operator, or, student housing or parking. Those are the types that come to mind. Perhaps golf courses. I don't know. It depending on the arrangement. A golf course, public golf courses that have an operator, this could apply to those situations depending on the contract and the arrangement at hand. Yes. And who has the ability to approve, what services are being provided to whom, and also the prices to be charged.
Yes.
Yeah.
And the availability payment arrangements, because that can be a way of compensating a private concessionaire for designing, constructing, and operating, which that's what you're going to talk about next on the next slide. There you go. That'll be the example.
Yeah, because I don't have any like concrete ones, because
no, I don't think it's common in our clients is part of the reason why we struggle with that. So you can talk about it and maybe it'll help everyone understand it.
Yeah, so really the distinguishing piece here is that a government procures a capital asset or service rather than receiving compensation to allow another entity to provide the service.
Yes.
So I think these are going to be less common, except for maybe like very large agencies, or even maybe really small ones that decide that, procuring a capital asset or service through an arrangement like this is better. But I'll try and think of examples to provide later on once I see more. Because as we get closer, at least we have, well, I guess it's next year.
It is. It's just around the corner.
So yeah, the denial is setting in.
Yeah.
But yeah. Okay, GASB 96, subscription-based information technology arrangements. This is effective in fiscal year ending June 30, 2023. So basically what this GASB is doing is defining what a subscription-based information technology arrangement is, in that it's a right to use subscription asset, which is an intangible asset, and a corresponding subscription liability. So very similar to GASB 87. It provides capitalization criteria for outlays other than subscription payments, like implementation costs of a subscription-based IT arrangement, and also requires disclosures regarding an SBITA. So multiple types of arrangements that fall under this GASB include like software as a service, infrastructure as a service, and platform as a service. And the formal definition is that it's a contract that conveys control of the right to use another party's information technology software alone or in combination with other tangible capital assets as specified in the contract for a period of time in an exchange or an exchange-like transaction. So in simple terms, the types of situations that this GASB applies to are cloud computing and subscription-based IT arrangements. So if you have subscriptions for IT arrangements or cloud software, this GASB will most likely apply to you. One thing to consider is that when you're working on GASB 87 leases, inventorying, consider also inventorying any subscription-based IT arrangements, as it's likely that you'll run into these types of arrangements when you're inventorying leases. And hopefully all of you have done your inventories already. So maybe you even have these subscription-based IT arrangements on your list.
That's some good subliminal messaging, Whitney. I wanted to point out one of the questions when I forgot that you wanted questions along the way. One of the first questions you received on the 87 slide was whether software was subject to 87. So this, I think, once we got to this slide, answers that question.
Okay, cool. Yeah. So yeah, the subscription-based arrangements would fall more under this, especially if they're IT related, because most of them, I think, are, unless, I mean, that's the really key difference, is that it's more of a subscription and then it's IT related in this GASB.
Most of them, yes, agreed. So the answer to the question is no. Software does not fall under 87. It falls under this one.
Yeah. Okay. So in terms of, how to account and report subscription-based IT arrangements, there will be a corresponding subscription liability. And then at commencement of the subscription term, when the subscription asset is placed into service, there also will be a right to use subscription asset at commencement of the term. So the subscription liability, what's included in there, will be measured using the present value of subscription payments expected to be made during what they call the subscription term. And then future payments will be discounted using the interest rate that the vendor for the subscription charges to the government, which may be implicit. And if it's not, the government's incremental borrowing rate should be used if the interest rate is not readily determinable. So very similar to GASB 87. And then going forward, a government should recognize amortization of the discount on the subscription liability as an outflow of resources, so expensing, for example, interest expense in subsequent reporting periods. So the subscription asset, what's going to be included in that measurement is going to be, number one, that initial subscription liability. Number two, any payments that are made to the SBITA vendor before commencement of the subscription term. And then any capitalizable implementation costs, which this GASB kind of discusses, would be included in the intangible subscription asset. And then past the first year, going forward, you would recognize amortization of the subscription asset as an outflow of resources over the subscription term. And then I do want to point out a reminder that this GASB will require a restatement for arrangements in place at the beginning of the fiscal year. So that's important to keep in mind. So it's similar to GASB 87 in that way.
All right, there is one more question, Whitney, on 96. So
okay.
Can you have a different materiality threshold for GASB 87 versus GASB 96?
If it's reasonable, I mean, I think there needs to be kind of a judgment call. I mean, it depends on what your policy was for GASB 87. If it's covering intangible, assets, so like lease assets, I think if you're establishing a threshold there, maybe it wouldn't make sense to have different policies. So I think it just really depends.
I agree. I would think that it never say never. It's not that you cannot, but it would make sense, like you said, to develop one policy. Since the accounting is so similar between the two statements, it would make sense to have a similar capitalization policy or threshold for both.
Yeah.
Agreed. Yeah. And there's one more question. What about the subscription that is renewed annually?
So it's kind of one of those similar to GASB 87, it has to be long-term, and it has to, if it's expected, if it's reasonably certain that the extension will be continued, you know, that it's not going to be just, we're going to assess it in a year kind of a thing, and you've always done the extension. You know, management has to decide whether or not it's reasonably certain that the extension will be um, followed through with in order for it to qualify as a subscription liability. Because if it's short term, similar to GASB 87, it would not apply.
All right. And does GASB 87, we're flipping back to 87 for a second, does 87 require ownership transfer at the end? Just require it?
No.
No. No.
But I think we'll talk, the class 87 class might touch on this a little bit too.
Agreed.
So
yes.
stay tuned for 10 o'clock.
Agreed. Agreed. And will GASB 96 apply to subscriptions for enterprise funds? Oh, I'm sorry. A correction to the prior question meant GASB 96. Does GASB 96 require ownership transfer at the end?
No, it's just basically a subscription of, you know, there's an underlying asset that's being used in some cases, but it's basically just a subscription.
Agreed. And will this GASB apply to subscriptions for enterprise funds?
Yes. If you have a subscription being used and, you know, is recorded in an enterprise fund, then it could apply under the statement.
Agreed. All right. That's it.
Okay, cool. Good questions. Okay, so GASB 100 is accounting for changes and error corrections. And this is effective in fiscal year ending June 30, 2024. I don't know why I have the help picture. I'm just seeing that now. I think I was saying help when I realized they issued 2 new GASBs in June 2022. So I sent for help there. So this GASB is defining accounting changes as accounting principles, changes in accounting principles, changes in accounting estimates, and changes to or within the financial reporting entity, and describes transactions or other events that constitute those changes. So for each type of change, basically the statement requires that for changes in accounting principles and error corrections, those must be reported retroactively by restating prior periods. And then for changes to or within the financial reporting entity, those should adjust beginning balances of the current period. And then changes in accounting estimates should be reported prospectively, so no restatement, by recognizing the change in the current period that the estimate is being changed. Also, this GASB is addressing how that information should be presented in required supplementary information and supplementary information, and clarifying disclosure requirements for these types of situations. So I think it's pretty straightforward, but something to just keep in mind is that this is coming, and to make sure to review it, to make sure, you know, you're capturing these types of changes appropriately. But there's a few years before this GASB is effective. Okay, last polling question.
All right.
And I totally forget what question it was. Oh yeah.
All right, so which rate was LIBOR replaced with? Oh, it's like a horse race here. One was winning and the others are pulling up the rear here. All right, we can end the poll.
All right, so the correct answer is secured overnight financing rate, SOFR. That's what LIBOR has been replaced with.
All right.
Okay. Wait. Okay. So the next one, effective fiscal year ending June 30, 2024, is GASB 101, compensated absences. So this GASB is updating recognition and measurement guidance for compensated absences by aligning recognition and measurement guidance under a unified model and amending certain previously required disclosures. So for a liability to be recorded for compensated absences, that liability should include, number one, leave that has not been used, and number two, leave that has been used but hasn't been paid in cash or settled through any non-cash means. And also there's certain types of compensated absences that they clarify in this GASB and how it should be included in that balance. And basically, I just want to point out that parental leave, military leave, and jury duty leave, GASB has said should not be recognized in compensated absences liability until the leave commences. And also the disclosure for compensated absences now will include the gross increases in, not include gross increases and decreases in liability, and allows for only disclosing the net change in the liability as long as it is identified as a net change. And in addition to that, there is no longer a disclosure requirement to disclose which governmental funds have been used to liquidate the liability for compensated absences. So they've amended existing requirements for disclosures. Okay, I think I did polling question 3 too early.
It's all right.
I don't know why. Just being special.
On the mind.
Yeah.
All right.
So I guess I just real quick, I want to just kind of mention the implementation guides. So like there are 3 that I'm just going to touch on really quick. 2019-3 leases is effective in fiscal year 22, fiscal year and calendar year 22. And there's 75 questions and answers related to leases. So this one is effective and you want to take a look at it to make sure that you can get more of an understanding and look at the Q&A. And then 2021 implementation guide covers more leases, also investments in external investment pools, fiduciary activities, conduit debt obligations, and then some pension and OPEB clarifications. And this one is effective in fiscal year 22 and calendar year 2023 and has 21 new questions and answers and 5 amendments to previously issued questions and answers. And then finally, 2021 one is effective over 3 fiscal years, 22, 23, and 24. And it has 23 new questions and answers and 4 amendments to previous questions and answers. And it covers derivative instruments, more fiduciary activities, a lot of lease clarifications. So we're going to see that a lot, and non-exchange transactions and MD&A. So just want to point out that those are also effective during, the next 4 years. And that's it.
Great.
Any questions? More questions?
We do have 2 more questions. The first is back to SPIDAs. What if you pay for software annually over 10 years?
Yes, it could. Well, I guess in terms of it again depends on the contract. And it also depends on, well, actually, the length of time would be met because it's, long-term, as long as it's long-term as of the date of implementation of the GASB. So again, you just want to go through the chart, the decision tree, as they call it, for subscription-based IT arrangements to make sure the requirements are met.
Agreed. All right, and then the other question is, would a website hosting site be considered a SBITA? So I assume an agreement related to
hosting.
paying for
It
hosting.
could. Yeah, it depends on the arrangement and what is, being subscribed to, and like consideration, and basically the same thing, depends on the contract.
Agreed. If you think about the ultimate goal of the leases and the SBITA statements, it's about recording those long-term commitments. It's a long-term liability in a sense that's being pulled in. It's not a month-to-month agreement, not something that's short-term, but long-term, pulling in those long-term liabilities into the financial statements. Oh, one more question has popped up. Let's see. So has the new acronym pronunciation been embraced by ACFR? Yes.
Yes, ACFR.
ACFR. I think we're all getting used to it. It was very difficult in year one. Yes. Where can they find the decision tree guidance for SBITA? It's in
the GASB statement, and there might be, GASB statement should have like the decision making, what the criteria are.
Yeah.
So it's not really like a tree like we've seen it in other resources, but at least if you go through it, you can see what the tree is, what the decision points are.
Yes. And there'll be a link available for the survey. Yes, Stephanie will put it in as soon as we're done rambling on.
Yeah, so look in the chat.
Yes.
In the next couple minutes.
There it is.
Okay, right. Yeah.
Yes.
Perf. So again, the survey, you must click on the link in the chat. The webinar today will not redirect you to the survey page to fill out. It'll just be in the chat here.
Yes. And once you're in there, you're able to click that link more than one time. You can open it up multiple times, so you can do it for each class that you've attended. And then also there will be a reminder email sent out later, that either, I don't know if it got out today, tomorrow, or later this week, that will also have a reminder in the event you can't get it done today.
Yes.
Tomorrow, Stephanie says, tomorrow, the emails will go out tomorrow to remind you if you haven't completed the surveys. And then the CE certificates will be issued next week, by the end of next week, I think you said.
Yes. And then one more question, where do we find the video from today's recording? So those do take a little bit of time because, but we do have a YouTube page, Mays and Associates YouTube page, where you can find our videos. So I would imagine in the next couple of weeks, we'll have those videos from Mays Live this week uploaded into our YouTube channel, and probably a link on the Mays and Associates website.
And Stephanie included the slides one more time at the end here, so you have the ability to download the slides as well. Great.
Thank you, everyone.
Thank you.
And hope to see you guys at 10 for leases. Go get a Red Bull.
Please do get a Red Bull. Thank you.
Thank you. Okay, bye.
All right, bye-bye.